Things are looking up. Your business is growing. So what's your next step? A bigger office? A new supplier? Your next big contract overseas? Your business has growing needs. You'll need more support, more flexibility, more resources, and a bank that makes it their business to help expand your business. Welcome to Business Banking with HSBC. All our experience and expertise brought right to you so that you and your business can take the next step. You'll have support from a dedicated relationship manager and access to our global network of experts. The flexibility to manage your finances across multiple devices. International accounts all on one platform. And much more. So choose Business Banking with HSBC and take your next step.
Hello and welcome to the 7th Annual Indonesia Economic Forum. We are here in Jakarta broadcasting live and reaching all corners of the world. This is the first time that the Indonesia Economic Forum has been truly global using our online and virtual platform. Thank you so much for joining us. We've been going on for 2 days now. This is a three-day program. We've had speakers and participants from across the world joining us for the last 2 days. Very instructive, very deeply insightful discussions, really looking at how Indonesia, the region, and the world will position themselves in the post-COVID era. Today we have with us a very distinguished panel speakers. It's my pleasure and my honor to welcome Luky Alfirman, who is the Director General of Budget Financing and Risk Management at the Ministry of Finance, Republic of Indonesia. Luky, thank you so much for joining us. We have Mr. Sean Henderson, MD, Managing Director and CoHead of Debt Capital Markets at HSBC. Thank you, Sean, and welcome. We have Ms. Isabel Chatterton, who is the Regional Industry Director, Infrastructure, Natural Resources for the Asia Pacific at the International Finance Corporation based in Singapore. We have Mr. Mervyn Tang, who is the Senior Director and Global Head of ESG Research at Fitch Ratings in Hong Kong. And we have Mr. Hendro Utomo, who is the Ratings Director at Pefindo Rating Agency right here in Jakarta. And of course, we have our very established and distinguished moderator, Mr. Nalin Singh, who is the co-founder and CEO of Orbit Future Academy. Just before we get started, let me just kind of lay the background for this session. Over the past few years, investors, bankers, and other financial institutions have begun to look beyond just pure financial returns to evaluate their performance and their lending criteria. Today, more and more institutions and investors consider other factors such as environmental and social impact of their investments. According to the Global Sustainable Investment Alliance, nearly 30% of all assets under investment in 2018 were socially responsible investments that take into account environmental, social, and governance issues. This figure is really likely to grow substantially in the coming years. Indonesia too is moving onto a green and sustainable development pathway under the National Long-Term Development Plan. According to estimates, the annual investment needs to achieve sustainable and importantly equitable economic development is in the order of 300 billion to 500 billion annually. A large part of this investment will be needed in critical areas such as infrastructure, as well as environmentally sensitive areas such as agriculture, forestry, energy, mining, and of course waste management. Indonesia's financial markets have seen a number of important design innovations over the past few years, aimed at encouraging green lending and investments such as the development of sustainable ratings. The government has also begun to take steps to green some aspects of the financial system, with OJK's roadmap for promoting sustainable finance, which includes developing a binding regulatory framework for green finance. So what are some of the key issues facing Indonesia and, of course, the financial industry? Number one, what are the long-term trends in sustainable finance within Asia and Indonesia? How are financial institutions adopting green financing? What is the potential size of green financing products in Indonesia? When you apply a climate landscape financing, what kind of key innovations are emerging? What is the impact of sustainable finance on overall economic growth and progress? And of course, what institutional incentives are being put in place to encourage such investments? I hope that the panel will be able to touch on some of these issues. To get us started, let me please introduce and welcome Luky Alfirman, who is the Director General of Budget Financing and Risk Management at the Ministry of Finance. Luky, the screen and the stage is yours.
Thank you very much. Distinguished speakers, participants, ladies and gentlemen, very good afternoon from Jakarta to all of you. So it's an honor for me to be here today to deliver this keynote address on this prestigious event that brings together government institutions, private sectors, civil societies, academics, young generations to promote Indonesia's social and economic growth. I would like to extend my appreciation to this forum and organizer, of course, and forum partners for organizing and inviting me to today's event. So, ladies and gentlemen, I will start with this statement. Indonesia is highly committed in combating climate change. The country is highly vulnerable to the adverse impacts of climate change and understands that it should respond effectively and in a more systematic way. We have pledged our strong commitment to shift the economy to a low carbon and climate resilient development path that has been integrated in our development policies, strategies, and programs. The policy direction for national priorities related to the environment and climate change consists of, first, improving the environmental quality, second, enhancing disaster and climate resilience, and third, low carbon development. As a responsible member of the global community, Indonesia has ratified Paris Agreement in 2016 and submitted its nationally determined contribution, or NDC, in which Indonesia has committed to reduce greenhouse gas emission by 29% from the business as usual scenario in 2030. However, with this international support, the target will be even more ambitious, with reduction of 41% in 2030. At the national level, Indonesia has set the institutional framework and strategies to combat climate change through National Action Plan on Climate Mitigation, Climate Adaptation, and Biodiversity. As a part of strong commitment towards climate change issue, the government of Indonesia just recently issued what's so-called Omnibus Law on Job Creation, which aim to promote economic development and trade and investment to support Indonesia's commitment to address ESG issues, both in government and private sector levels. This has been reflected in several articles within this job creation law. For instance, the law stipulates requirement for environmental license or permit to obtain business license, requirement for investors to establish what's so-called environmental rehabilitation fund, and precautionary measure to prevent degradation of ecosystems and biodiversity losses. The Omnibus Law provides legislative framework to promote economic development, trade and investment, and enhance competitiveness while balancing out environmental concerns. Distinguished ladies and gentlemen, it is very true that the climate change actions are quite costly. Estimation on the required financial resources to meet Indonesian emission reduction targets vary. However, latest estimation presented in the second biennial update report stated that around 3,461 trillion rupiah, or around 247 billion US dollar, is required to meet the unconditional emission reduction target. The government so far on climate change is around totally 373 billion rupiah, or around 26 billion US dollar in the period of 2016-2019. By considering the current trend, a significant budget cap to achieve the target set NDC can be expected. However, we know the cost of doing nothing will be even larger. In this endeavor, Ministry of Finance has developed a budget tagging mechanism to maintain the national budget that correlates with climate change impact. It is a performance-based budgeting system and is embedded into national budgeting system. The system enables government institutions to identify and to assess their expenditure related to climate mitigation action. The result of this budget tagging has enabled the government to better map the financing needs across sectors requiring green financing. With the rapid development of global green bond market in recent years, Ministry of Finance could see the opportunity to develop new and innovative instruments to finance green projects. We then developed the Green Bond and Green Sukuk framework that sets out the management and use of proceeds, project eligibility and criteria, and reporting mechanism of green bond or green sukuk sovereign issuance by the government. The framework was reviewed by a leading independent reviewer, Cicero from Norway, and given medium green status. Going forward, Indonesia also has been very mindful of the importance of promoting environmental, social, and corporate governance, or ESG. So, Mr. Finance, with various initiations, have already implemented, including the issuance of green scope instruments used to finance or refinance climate change mitigation and adaptation project in Indonesia. This year, we also have issued what's so-called cash wakaf link sukuk to encourage private sector participation as well as philanthropists for investors to support Indonesia development agenda, especially related to reduce poverty and income equality. In addition, the Ministry of Finance is currently in the stage of reviewing, exploring the issuance of SDG bond for next year. So far we have issued Global Green Sukuk, which is under Sharia principles. With this SDG bond, we are aiming at this conventional investor looking at this conventional bond. Ladies and gentlemen, according to the National Medium-Term Development Plan, infrastructure financing gap in Indonesia is larger compared to the previous term. Around 42% of total infrastructure investment needs is targeted, coming from the private sectors. To deal with the target, business as usual could not be implemented or not be sufficient. The key here is to combine, to blend public funding with private financing. This is the reason why Indonesia also launched what's so-called the new platform called SDG Indonesia One in 2018, which is designed to mobilize private capital for sustainable infrastructure using blended finance. The SDG Indonesia One covers 6 programs, namely good health and well-being, clean water and sanitation, affordable and clean energy, industry, innovation and infrastructure, sustainable cities and communities, responsible consumption and production, and climate action. So far, as of today, the SIU, the SDG Indonesia One, has been building collaboration with each partner with the total funding around 3.6 $63 billion US dollar. Some concrete examples facilitated by this PTSMI as the organizer of, or the manager of this funding, including construction and rehabilitation in vulnerable communities and disaster area in Palu, Sili, and Donggala, Central Sulawesi Province. Going forward, the government is driving the SIU to play even bigger role, particularly to respond to the pandemic situation by channeling the fund to projects which support SDGs and has direct impacts to communities, especially for small, medium projects. In addition, it's expected that the SIU, the Indonesia one, can be expanded and sharpen its role in structuring a project financing that may accommodate both public and private interests. Green Sukuk, global Green Sukuk issuance. Indonesia is the first sovereign Green Sukuk issuer in the world, and leadership has brought benefit to Indonesia. The rise of Green Sukuk initiative helped to grow the global Sukuk market in the long term, as the current crisis could encourage potential new issuers. In 2018 and 2019, government of Indonesia has successfully entered the market and issued the first and second global Green Sukuk in the amount of $1.25 billion US dollar and $750 million US dollar respectively. The issuance in 2018 represents the world's debut sovereign Green Sukuk issuance and the first ever issuance under the Republic's newly established Green Bond and Green Sukuk framework. This is in line with the Republic's ongoing objective to strengthen the global Islamic financial market and commit to environmentally sustainable green funding. Also, these issuances represent the government's commitment, leadership, contribution in global sustainable financing, as well as it has been able to attract foreign investors who are shifting towards sustainable corporate practices, specifically towards Sharia-based sustainable financing. Amid the uncertainty of global market conditions due to COVID-19, in June 2020, or 4 months ago, the government of Indonesia has again successfully issued another global Green Sukuk in the global market in the amount of $750 million US dollar. We issued 5-year tenor with the yield rate of 2.3% per year, record low. Some of the achievement of this issuance: lowest coupon rate for 5 years tenor, oversubscription by 7 times, and successfully attracted a large number of global green investors, around 34% of the total value coming from these green investors. Even further, in the domestic market, we also have successfully issued the first retail Green Sukuk in November 2019, which is sold to individuals through online platform, with the total issuance around 1.5 trillion rupiah. The issuance attract around 3,000 investors, and the majority of investors, interestingly, are millennials generation, around 51%. Following the issuance, on February 2019 and March 2020, we published our first and second annual Green Sukuk report as promised. The report has also gained assurance from KPMG for the first report and PricewaterhouseCoopers for the second report on the sustainability or the suitability of the Green Sukuk issuance process with the framework. So, ladies and gentlemen, all of us prone to the adverse impacts of climate change, and climate change needs an effective response. Climate finance is quite costly and requires a strong global collaboration of governments, businesses, multilateral institutions, NGOs, and communities. In the case of green sukuk issuance, from our experience, it needs strong commitment, leadership, coordination due to the long process required and many stakeholders involved in both designing green framework and finalizing this green impact report. My point here for sure, this green bond issuance needs much extra work. However, I would like to emphasize this, highlight this one thing. From our experience so far, unfortunately, we haven't seen yet pricing benefit by going green, other than broadening green investor base. Therefore, to attract more sovereigns or corporations issuing green bond, green sukuk, or other thematic bonds, investors and market or the system as a whole should be able to provide more incentives on sustainable or green instruments. And we know, obviously, pricing benefit is one effective way. Government Indonesia invites support from all stakeholders in developing sustainable finance program in Indonesia. We also encourage other sovereigns, private sectors, state-owned enterprises to follow government initiative by going green to combat climate change impact. We are excited to share our experience with other countries and to enhance collaboration and partnership among global stakeholders. Indonesia stands ready to make real action to support this agenda. We hope that today's event can be another important milestone towards sustainable finance to grow more in the future. Thank you very much. Very good afternoon.
Thank you, Luky, for that opening comments and for your keynote address. As you mentioned, while climate change is definitely top of the agenda, not just for Indonesia, but I think for many countries around the world. Would you have some time, a couple of questions, maybe from the moderator or some of the panelists? Luky, do you have a couple of minutes?
Yeah, I can say 5-10 minutes. Please go ahead. Okay,
Nalin, or any of the panelists, if you have a question for Luky.
Luky, this is Nalin Singh here. I had a question for you. Indonesia did take the lead, right? In ASEAN, it was the first country to launch a sustainable finance fund very early. You had an approach paper. But I wanted to ask you a question about the first report that came out where the 15 top banks reported on their sustainability and only 24% were meeting global parameters. And they focused more on the governance issues than environment and social issues. Is there some course correction that you think the government is going to initiate there?
Can you hear me?
Yes, we can.
Okay, yeah, thank you very much. So as I said, this comparing to what's so-called just regular bond issuance. So we just simply produce our prospectus, our OC, and then go to the market, right? And then afterward just paying the coupon. That's the obligation. With this green bond or green sukuk, so even in terms of in the stage of preparation, we have to spend much more, work, energy, right? Starting with this green framework and everything. And later on, after the issuance, we still have obligation to produce this report. And the challenge here, the report should give you or give investor kind of the delivery of our promises, right? And the challenge for us that we are Ministry of Finance, we are managing this financing, but the result itself are in the different ministries or even in local governments. So that's why in my speech, right, I also emphasize about the coordination, the leadership among institutions, among agencies, right? So because again, the result itself are not in the hands of Ministry of finance. That's kind of the experience that we have, which is quite challenging. As I said, much more extra works. But is it worth it? Yes, this is part of government commitment toward this climate change mitigation or combating this climate change. But as I said, that perhaps if you want
Thank you.
to be more green, to attract more green investors or green issuers, that there should be some kind of more incentive to attract more green issuers.
Thank you. Does any other panelist have a question?
If not, I think...
So I will jump in and ask one more question.
Okay, go ahead, Nalin.
One more question while I have Luky here. So in Indonesia, many countries have now allowed COVID mitigation investments to be a part of sustainable finance to qualify for ESG. Is it so in Indonesia? Has the government allowed that?
Go back to our issuance in April 2020, but this is for conventional. At that time, to be honest with you, to be frank with you, we seriously considered to issue what's so-called, pandemic bond, whatever it's called, right? But the challenge was that at that time is that, again, as I said, extra work in the sense that we issue with the framework first, and then later on, we have to produce this report. So it might take some time for us to complete all of those requirements. And at that time, we didn't have time to do so. We had to use this tiny window, right? You know what happened in April, right after the pandemic. I think Indonesia was the first sovereign issuer of post this turbulence back in March and April. So we had to use this tiny window of opportunity. But with the option or the decision, but not going or using really labeling this as a pandemic bonds. Okay. But going forward, I think, again, there are always some pros and cons, positive and negative. So however, I think people, our investors, our bondholders, knows welfare in Indonesia, but Indonesia, we have this reputation, we have this credibility. So I think without having to go with this specific pandemic bonds, I think Indonesia has been quite attractive, to attract these potential bond investors.
Thank you.
Well, thank you so much, Luky, for your time and for your insights. And I think you've laid the groundwork for the discussion with the panelists. Definitely, Indonesia is, I think, one of the first countries to really take going green and sustainable finance seriously. And I think we applaud the government and, of course, your ministry's efforts to ensure that this continues as we go forward. So thank you very much, Pak, for joining us.
Thank you very much. Very good afternoon, everybody. Have a good day. Stay healthy.
Take care, Pak. Nalin, I will now hand over the screen, so to speak, to you to start the panel discussion.
Thank you, Shoaib. Thank you for introducing all the panelists, and that was an interesting conversation with Pa Luky. We have a very distinguished panel, very accomplished professionals. In fact, Isabel comes from an organization that was part of the very start of the movement of the ESG investment, so to speak. Now, Indonesia Economic Forum is watched by a lot of students. We have some attending today, but later they watch the recording. Many of them probably don't know how the story of ESG began. Now, sustainable financing, social impact financing has been around since the 60s, one way or the other. It had different names. But the spark for ESG really started in 2004, when the then UN Secretary General Kofi Annan wrote to 50 CEOs of the top financial institutions and asked them to participate in a joint initiative under the UN, but with the support of IFC, an organization that Isabel is part of, and the Swiss government. The goal was, how do we find ways to integrate ESG into capital markets? And a year later, in 2005, a report called Who Cares Wins came out. That led to the Freshfield report, and that led to the Principles of Responsible Investment at the New York Stock Exchange, the Sustainable Stock Exchange Initiative, and it just took off. To a point today where $20 trillion at last count, this 2018 numbers, $20 trillion of assets under management, which is about 30% of the total professionally managed assets in the world, claim to be for sustainable financing. So it's not just talk. There is real, tangible impact happening. But how much of it is happening? Are investors happy? Are they getting better returns? Is impact in places like Asia and Indonesia, where there's a high susceptibility to natural disasters? Does it lead to greater social resilience? Do entrepreneurs have an opportunity to tap into this? If yes, how? Can Asia lead in prototyping? Because this is where all the growth is happening. This is where a lot of new capital is coming in. But thankfully, I don't have to answer these questions. I have 4 very distinguished panelists who are deep into this field to answer that. On that theme, I will request each panelist to give us a brief overview of what they do in this area and what other thoughts they have or insights they have about this sector, specific to ASEAN, maybe global trends, maybe Indonesia, for 3 to 5 minutes each. And then I'll go ahead with questions and take questions from the audience. And we'll try to keep it as interactive as possible. So I'm going to start with Sean. Sean, you are doing a lot of work in the debt markets and in green bonds, etc. And it is the nature of money, which is global, that we have a global panel. I'm sitting in India, some are in Hong Kong, some are in Singapore, some are in Jakarta. So money, makes as many barriers as it breaks sometimes. But very nice to have you here. If you could kick us off and give us a brief overview of what you or your organization are doing in this area and how exactly do you see this shaping up?
Sure, thanks very much, Nalin. So I'm with HSBC and I co-head the debt capital markets business in Asia Pacific, which effectively is the bond market issuance division within the bank. And it's really been an incredibly rapidly moving market, right? If you look at on the bond side of things, if you look at green and social bond market development, back 5 years ago, 2015, it was about 16 billion worth of issuance, right? And if you look at 2019, there was 110 billion worth of issuance. So it's a huge, rapid development of this market in terms of investors getting involved in bond issuances, which have either a green or a social label. In terms of the total, that's about 325 billion or so outstanding at the moment. And actually, Asia Pacific was quite slow in the initial stages of this market, the development of this market, but it has caught up very rapidly. So approximately 60 billion or so now comes out of Asia, right? And if you look at that in terms of, how that's split, it's just over 50% is actually green. And then there's, about a third of it is social, and, relatively small proportion of it is now related to sustainability, but that piece is actually growing quite fast. So if you put that into context, like, for example, we were very lucky to be able to work with the Republic of Indonesia in their first green sukuk issuance that Luky mentioned. And it was quite funny because when we went around the Asian investor base, most of them were saying, what is green? And then we went to meet the green investors in Europe, and most of them were saying, what's a sukuk, right? So there's clearly, there was a very developed kind of green market in Europe, but less familiar with, the Asian issuance formats of sukuk. And so it's taken a little bit of time for that to develop. And there was a lot of education that went into that process by the Republic of Indonesia, really groundbreaking work, particularly with the the green investors in Europe to understand the perspectives of Asian issuers, but also perhaps more importantly with Asian investors to try and understand, what green meant. And we've seen huge development over the last couple of years in terms of that change. So I think it's also important to recognize that there's different layers of how investors treat green, right? So there's a very small subset of the market which is pure green, right? So call it circa 10 billion or so worth of issuance of asset under management. So it's actually quite a small pool which will only buy green, right? Then there's about 120 billion which has an ESG or a SRI label, right? So it's specifically around ESG, but it's broader definition of it, right? Including social, etc. But actually, if you look at the assets under management, there's about 6 trillion or so of investors which say we're managing these assets, but we are applying ESG into every decision we make. So we will not buy you unless you have a very clear and transparent strategy around ESG. And so I think it's important to recognize that it's actually that shift of the 6 trillion that's driving the market, not the specialist funds of 10 billion. I mean, those specialist funds are useful, but it's actually the broad shift of the investor base into wanting to know what every issuer is doing on ESG. That's the bit that's really going to change the market. And so, for us, that's a big commitment. And you can see it, for example, in governments announcing a target of net zero or signing up to Paris agreements, and how does that impact behaviors? That's the really important decision that's going to be driving the market for the next 10, 20 years. Yeah.
So, Sean, did I hear you right when you said that Indonesia, when they launched this groundbreaking work, HSBC was a part of that initiative?
Yeah, so we helped them with developing the framework, but it was really a very interesting piece because, to Pak Luky's point, and I think this is one of the big benefits of actually issuing a green bond, right? Is it actually operationalizes the strategy. So if you've got an ESG strategy at the top level, well, that's great, but actually to make it work, what you need is everybody at the in the case of a government at the ministry level to be able to implement that strategy. And when you do a green bond, it actually forces the government to go to every ministry and say, well, what is your plan in terms of deploying the funds? What projects do you have that can qualify for this green bond? So it really pushes down the behaviors that link to that strategy. And I think when you do it in a corporate as well, what we've seen is one of the biggest benefits of establishing a framework and issuing a bond is it actually pushes the entire organization's goals to align with that framework. And it really changes behaviors in a way that, if you don't do the work, it's very difficult to get that coordination required to really change the organization. Yeah.
So there is a very larger investor behavioral change that is driving this liquidity and this move. One last question before I move to Isabel, and I'll come back to you later. Is there in ASEAN, because you look at the whole region, is there more corporate, less government, or is it equal? How does it go?
I'd say it's a reasonable mix. I think definitely Indonesia has been at the forefront from the government issuance perspective by far. But in terms of corporate, there is a reasonable amount of issuance. The tricky thing with corporate is you've got to find the right sector. So, for example, if you're in the renewable energy sector, then it's an obvious market to go to, right, to benefit from the fact that you are green. You've also got a number of sectors such as real estate, which have very clear and transparent guidelines about what constitutes a green building or not. It gets trickier when you move into other sectors. But I think what we are seeing is rapid development of the market into new areas. So as Pak Luky mentioned, for example, the development of the sustainability linked is actually a very important development for the market. So whereas a green bond is about applying your proceeds to a particular project, what we're seeing now is corporates are establishing frameworks at the corporate level, and they're committing to KPIs and performance metrics at the corporate level, which allows them to then link the achievement of those objectives in a sustainability-linked bond. So you've seen very, very wide use of this. For example, we've done deals for Novartis, which is linking to their ability to, reach patients in low and middle income groups. And I think actually for Indonesia specifically, this is a very important part of the market, because if you actually look at Indonesia, it's got huge initiatives around, improving the welfare of the average population, right? And the Nawacita and the 9 principles. So it aligns very neatly, I think, with new developments of the market around sustainability-linked bonds and also transition bonds, transitioning to lower carbon forms of energy production, etc. These are all very important themes, I think, in Southeast Asia. Yeah.
Now, Sean, I think you made an important point. A lot of people tend to immediately jump to the conclusion that this is all about climate change and stuff like that. But there is a larger play here: the labor market, the talent, the product, data security. So many things go into that whole ESG bucket. But I'm going to move to Isabel. Isabel, your organization has got such a rich heritage of being part of the very, like Sean and HSBC were part of Indonesia's story. You were a part of the journey right from the UN and the Swiss government. So what exactly is IFC doing now? And how do you see this whole larger movement that Sean was talking about, this investor behavior change, play out in the region? Because you have a more of a macro view on this.
Right. So I couldn't agree with Sean more. Actually, we have come a long way in those years, these 10, 15 years. We have broken lots of new ground, and we're actually continuing to learn. So to give you an example, the IFC issued the first global US dollar denominated benchmark sized green bonds back in 2013. I mean, I can't believe it's been 7 years. And that bond set a precedent as the largest green bond in the market at the time of issuance. And today, I think as of end of June, which is the end of our financial year, so just 5 months ago, as of end of June 2020, IFC had issued $10.4 billion worth of green bonds in 20 currencies. So it is incredible what we have seen and how quickly we see the market has taken up. And it's because there's been a global realization that it makes commercial sense to follow these principles. Going back to this $10.4 billion bond that we just issued, the proceeds of those bonds until mid-year have gone to, I think, 220 projects, and are expected to reduce an incredible amount of emissions as equivalent to something like 2.5 billion gallons of consumed gasoline. So I think we're definitely we have changed the path of development when it comes to sustainable finance, for sure, all of us together. I wanted to also mention that there are dual tracks and many tracks that corporates and financial institutions can pursue. We have also invested, for example, in a $12 billion climate finance investment through financial institutions to, in turn, support climate-related credit lines. Last year, for example, we subscribed a $50 million bond issued by Banco Pichincha in Ecuador. That's the country's first green bond issuer. And in doing so, we actually joined forces with Proparco, with IDB Invest for a total of something like 150 million. And the proceeds of that bond, the Ecuadorian private lender would be able to finance projects across a range of markets, right? Renewable energy, sustainable buildings, green mortgages, clean mobility, energy efficiency. I mean, the range of applications of these funds is tremendous. So another area where I think we have broken new ground is how we now mobilize private capital. We achieved this through 2 green bond funds, which have raised $2.5 billion for investments in financial institutions. And the real sector, for example, the Amundi Planet Eagle Fund is the world's largest targeted green bond fund that focuses exclusively on emerging markets. And the Real Economy Green Investment Opportunity Fund, which we just launched in May this year with HSBC, actually the global asset management part of HSBC, is also another example of how much we have changed, how much new ground we have broken, and how we continue to learn. So I just wanted to say that overall in IFC, what has happened is that we have found a strong positive correlation between the application of our environmental and social performance standards and the performance of companies. And commercial banks, not surprisingly, have come to the same conclusion. So as many of people know, more than 80 financial institutions worldwide follow IFC's standards on a voluntary basis. And they are really assessing project finance and corporate finance transaction following IFC's commitment to reduce our impact on environmental and social. So in Indonesia, for example, I think, Ojeka and Sean, I think you've set the ground very well. I think Indonesia is really a true pioneer. When they unveiled the national strategy back in December 2014 to promote sustainable development, I think we were all pleasantly surprised, right? It covers banking, it covers the entire capital market and non-banking sectors. So it's really helping them grow in a sustainable manner, in a sense. So your question on Asia, the region, my sense is, I think in fact, East Asian countries have been leading the charge. I think they're very well placed to show globally how much there is at stake here, right? I think East Asia has rich natural and social capital. I think these are vital resources for the region and for the rest of the world. And they could be quickly lost if the right actions are not taken. I think everyone has realized that the climate battle is going to be fought and hopefully won in Asia. So with the strategies for sustainability in place, similar to the ones that Pak Luky mentioned and Sean, the region could really completely redefine business and economic growth for decades to come as we know it.
So the interesting perspectives there and data points from Isabel. But Isabel, at this point of time, now Indonesia had a great start without a doubt, and it led the way in ASEAN. At this point of time, from a macro view for the bond market, Indonesia, hot, cold, warm, where do you see it?
So we're very keen. We're actually very keen, as a matter of fact, so quite hot. But let me take a step back and just give you a bit of a macro view, right? The relative depth of capital markets in the regions is a key driver for potential growth of these green bond markets, right? Let me give you an example. 2 years ago in 2018, we committed the 150 million in a green bond issued by Bank OCBC and ISP. It's one of Indonesia's largest private sector banks. And this bond is the first ever green bond issued by a commercial bank in Indonesia. So this bond is actually going to deliver a new source of green financing to combat climate change, etc. But having said that, ongoing expansion of this asset class is going to take a lot more work and dissemination of this potential to investors, because investors globally remain wary of the relative profitability of sustainable investment. So I think we have started. We are very keen. We're very bullish on the Indonesian market for sure. And I think our actions show that. But we need to do a lot more to develop an asset class and to disseminate a lot more across investors what can be done.
Point taken. I think Pak Luky referred to that as well. So I'll get back to you on a similar question on the quality of such bonds as I will to Sean. But Pak Hendro, you are part of the organization that is one of the leading rating agencies in Indonesia. How do you see the action in the sustainable financing space right now, especially in the corporate side of it?
Yeah. So Nalin, in terms of the corporate sides for the interest or the activities, particularly in the green products, I think there are still a very big room to grow because even in the corporate or the conventional corporate bonds itself, the market is still, how should I say, very, very, very small compared to other countries. If we compare the corporate bonds issuance in Indonesia against other source of financing like bank borrowings, the ratio is far less than other countries. So I think Indonesia corporate bonds only represent less than 10% than the bank borrowings, while other countries, in our understanding, has exceeded more than 20%. So in that sense, the corporate bonds itself has a very big potential to grow, and also in line with that, the sustainable corporate bonds products. Again, the regulator has been very supportive in this matter. They have issued some of the regulation regarding the green bonds, and also I agree with you and all the panelists have spoken here that Indonesia, the government is considered to be the pioneer in the issuing government bonds, green products in the global market. Unfortunately, I have to say that the corporate itself is not that active in terms of the green bonds products. I think since the regulation was issued in 2017, in domestic corporate bonds, I think only one issuance. It's by the Sarana Multi Infrastructure. It's a state-owned infrastructure financing company. They issue the first green bond, and I think the size is also not quite substantial compared to the other instruments being issued. We have several green bond issuers, but mostly for the global market. So the issuance was in US dollar, and it's listed not in Indonesian capital market. So it means that most likely that the demand from the demand side, it is more preferred for the issuer to issue in the global market rather than in the local market. So I think there is also one of the challenge here, how to attract the local investors to have a more preference in the green bond, because if there is some incentives or some requirement for the local investors to participate in the domestic green bond product, it should create a demand, and accordingly, the supply will also come up. The issuer will consider issuing these green bonds, because they will see that there will be a benefit that will compensate the cost and the effort of the issuing non-conventional corporate bonds. And Pefindo itself, actually, we haven't really directly participated in the green bonds rating. You can say that. There are some other rating agencies, global rating agencies, that already has the products for assessing or verifying the green bond instrument. We are highly considering also to participate as the eligible green product reviewer, particularly with the further development of this product in Indonesian domestic market. We have participated in several workshops related to this sustainable financing. Although there are other processes needs to be done by ourselves, including the establishing the methodology for the green bonds rating, and also fulfillment of the competency of our personnel, because the regulation requires certain certification or the expertise to be eligible to review the green products. So I think we have a very good future for the domestic corporate green bonds in Indonesia.
So I hear you, Hendro. I mean, for a lot of financial products, that these are the challenges in Indonesia. People go out, the corporates are keen, they go out, raise it at a global level, regional level. But within the country itself, be it financial literacy, be it hesitancy, be it not as hot stock market culture, the local investor tends to lag a bit. But it's good that there is interest for the corporates to raise at least. So Mervyn, coming to you, so you cover the region and you probably see the same trend as Hendro is referring to. What's Fitch's view on this? I mean, how do you see this going, and where do you see Indonesia and the ASEAN play?
Yep. So Fitch, for us as a credit rating agency, we got into this business when investors start knocking on our door asking, how does ESG issues affect credit ratings? And this goes to what Sean was saying, that it's not just the green specifically labeled investors or the ESG labeled investors. There's trillions of assets out there who are not only looking at what the environmental and social impact the company has, but also how does environmental social issues impact the company. So we built out a team. So I manage a global team of 5 people who now focus on research on ESG issues. So with this whole policy focus on carbon emissions and transition risk, global economies and policymakers are tightening carbon prices. They're increasing carbon regulation. And that has a huge knock-on impact across economies, across individual issuers that we need to understand better. Similarly, I think as banks and investors are paying more attention to ESG issues, and it's not just climate, as you kind of mentioned earlier, deforestation, water scarcity, cybersecurity, we need to understand and have a consistent view across the board how these issues end up impacting our companies. When it comes to green and social bonds, as well as sustainability-linked bonds, that's important to us because the way that the sustainable finance market is evolving, it's expanding so rapidly, it starts to have an impact on financing costs. So if people are willing to pay more for green, they might potentially get an advantage from a financing perspective. Whereas if people start excluding brown assets, let's say deep fossil fuels, that could lead to financing restrictions for particular entities. And so that's where we have been looking. And ESG, I think, in APAC was, I think Sean mentioned, slow to start. But again, it's really picking up. And I think with APAC, it's at times developing its own lens on things because not every ESG issue is the same in APAC as it is in Europe. In APAC, the economies here have more reliance on fossil fuels so far in their economies. So the transition pathway and how to look at it is going to be different to a pure plan that is kind of coming through from the EU. Similarly, I think there was discussion earlier about physical climate risk. So how resilient is the economy to physical risks? In APAC, if we look at natural disaster exposures and catastrophe exposures, it is significantly higher. I think that's important because it gives APAC an opportunity to lead in the space of climate mitigation and adaptation when it comes to green finance and ESG overall, because here it's more exposed. I think you can extend this argument to the issues, let's say, Indonesia are more focused in. So Indonesia, agriculture and forestry is clearly a more significant part of the economy, significant part of the palm oil business. So there's a lot of focus on, say, sustainable forestry at the moment. And Indonesia is in a prime space to lead the conversation on how do you manage forests sustainably and how do you issue to tackle this particular problem. So I think there is plenty of opportunity for the APAC market to lead in this space.
Do you see the same trend that people in more developed countries, say the Americas and Europe, find a greater charm and attraction to green bonds issued from here versus the locals?
I think it's fair to say that there is a larger group of money looking at ESG, and there is more dedicated funds when it comes to ESG and green funds in the rest of the world. that's not to say that this can't develop in Indonesia or the rest of APAC, because it may be the case that there needs to be the right sets of instruments to allow that local money to be put in play. I think the Sukuk side of things is another area where Indonesia could lead. Sean was talking about, I think, sustainability-linked instruments beforehand, and we're seeing a lot of development here. And one interesting example was the recent issuance for Etihad, which was a sustainability-linked sukuk. Now, normally these sustainability-linked instruments are linked to interest, which clearly is not a viable option from a sukuk perspective, but they decided to work around that mechanism by linking the metrics and targets to the purchase of carbon offsets. So again, it creates that incentive mechanism where you, instead of just focusing on what your use of proceeds are, your broader issuer strategy and how sustainable it is. Because this whole sustainability-linked instruments, this market has grown because people are concerned that just because someone has use of proceeds dedicated to something green or sustainable doesn't mean that overall issuer strategy is sustainable. And I think this instrument is a way of dealing with some of these greenwashing or goodwashing concerns.
That is one of the finest answers to a tricky question I've heard. You ducked that one, but very well answered. Sean, I'm coming to you. I'm going back to the question I left you with. How does Indonesia compare to the quality of these green bonds? You know, they are competing with the Vietnams, the Cambodias, sometimes Singapore, Malaysia. How does it compare for a global investor when they look at it? Yes, we get it. They need to do more. The local companies need to issue more and get into this on a bigger scale. But is the quality good enough from a global investment perspective?
Yeah, look, from my perspective, I think the quality is absolutely fine. There's no question in my mind around the quality. I think the key is that, you know, what you've got to avoid as the market develops is it being watered down. And I think to that point, it really needs to be very clearly science-based. And from my perspective, that involves, for many issuers, I mean, there will be exceptions, but for many issuers, it's probably best to have a second-party opinion provider to ensure that the integrity of the market is maintained, right, in terms of impact. And I think that second-party opinion provider also makes sure that there's a report that investors can read that is independent from the issuer and yet provides them with all the key information in terms of having validated and looked at the framework and made sure that it's you know, consistent with green bond principles or UN SDGs. It's made sure that there's no kind of do no harm kind of principles have been taken into account, etc. So I think that is an important element of the process. But I'd say that broadly speaking, it's not really a question of the problem of the structuring. I think the structuring in Indonesia has been of a very high standard. The issue I think that's going to be the success or not of the market going forward is, I think, how does Indonesia embrace some of these new developments of the market? Because I think, as we mentioned before, they're extremely relevant for Indonesia and its own particular challenges. So, for example, the sustainability linked, you know, it's a nature of the markets in Asia that there's a lot of work that goes into social, right, in terms of uplifting the broader social community. And I think that those are areas which are very, very you know, kind of prevalent for the region, and also ones that I think can be very impactful in terms of a use of proceeds for the Indonesia economy and its people. So it makes perfect sense for that to be an area of growth for the market in the region. I think also we've seen other development areas, such as, for example, we did a Henkel bond, which is around tackling, you know, plastic waste, right? And so I think there's areas around pollution control, etc. All of those elements are going to be very, very important for the global economy, right? Because that's a real challenge, and particularly impacting island nations, for example. You've got all sorts of other areas around, for example, you know, COVID alleviation. That's been an important one. The sovereign itself did a bond where the use of proceeds was labeled for COVID alleviation. You know, the challenges of the impact of the rebound of the economy are not over yet, right? So there's still scope for banks, for example, and the financial sector to do COVID alleviation bonds. We've done a number of those for issuers elsewhere in the region. So I think it's more about using the UN SDG principles creatively to make sure that you can get the benefit of the good work that you're being done, whether it's corporate or government or SOE level. It's about, the Indonesian market using those principles creatively, and some of the new products coming to market, such as sustainability linked bonds, to really get the benefit from the investor base that they deserve. Yeah.
Thank you, Sean. Isabel, this COVID scenario is not all gloom and doom, right? There is excessive liquidity going on. Just look at the stock markets. What's happened with the green bonds with COVID? I mean, some countries have included COVID mitigation as part of the green bond criteria. Some are yet to do so. Some have said no. Do you see any trend there? Anything at all? People rushing after COVID mitigation stuff or raising money for that?
It actually depends, right? I think we've seen a large number of tools and approaches coming up in the market. We ourselves, for example, have created quite an innovative platform to mobilize capital markets to support in post-COVID recovery. We're bringing asset management managers and development finance institutions into the market to manage the funds. We, for example, as you know, many of you know, we created a platform for mobilization of funds before COVID called MCPP. It's quite well known, where the institutional investors are able to come in and invest at scale as passive investors alongside IFC. So we are basically applying the same principles post-COVID. We're trying to crowd in support because we do expect that there's going to be a lot of resources needed, not only for recovery, but there's also going to be some insolvencies and bankruptcies that are going to be coming on our way. We're also establishing tools to de-risk projects. We have established, for example, a blended finance instrument that has been used again pre-COVID, but now we're using it in a lot more innovative ways, including supporting with some sort of mezzanine financing, for example. So we're doing risk mitigation, blended finance, and of course we're looking at when we could actually support local currency. So I wanted to touch on whether or not we've seen others do this. We've heard a lot of interest on the restructuring and the bankruptcies. We haven't heard too much on how people are going to be tackling these. We are working closely with the World Bank colleagues on the policy side, to ensure that policies and regulations are pretty much in place for countries to expedite workouts and bankruptcies and things like that. I think we're really doing our best to put in funds to make sure viable companies stay afloat as much as possible, and when not possible, to help also the efficient and effective reallocation of assets where necessary. So we are seeing a lot of innovation coming post-COVID, but not as quickly as we would like to see it, right? I think the impact of COVID is being felt in other regions, and is going to be felt for a longer than Asia. So in that sense, I think we're in quite a relatively better situation right now in that regard versus other regions.
Okay. Hendro, I'm going to pose you a question that's come from one of our participants. It's Richard Bossock. His question is not about ESG and sustainable finance, but about finance in general. But his question is, Indonesia is planning its sovereign wealth fund. And how will it work? I mean, how will investors want to buy, or why will investors want to buy into a fund with shares of state-owned enterprises rather than invest in a well-run state-owned enterprise directly? Do you see any value in investors going after a sovereign wealth fund which invests in state-owned enterprises?
Yeah. Okay, thank you, Nalin, for the question. So I think with the sovereign wealth fund, it is meant to have a more organized financing activities conducted by the government rather than through each state-owned companies that belongs to Indonesian government. So I think with this sovereign wealth fund, the purpose is to have a better management, financing management and strategy. Because at present, I have to say that some of the state-owned enterprise are still needs further improvement in its funding or the financing management. We have seen several state-owned companies were being too aggressive in the past, and it is now under the very challenging situation, like during this pandemic, when the refinancing become a big issue. It was not an issue in the past because of the very good economic environment. The economic growth is still positive. The infrastructure development is going very strong. But during this the pandemic era, we have to say that some of these players from the state-owned companies are trying very hard, to survive during this situation.
It's a valid investor question. I mean, they could easily invest in the better managed SOEs directly,
True,
rather than go into a fund which will hope to bring everybody up and elevate them to a certain level. So there is valid concern there.
Yeah.
Mervyn, now we have a lot of instruments. You see them from the Asia Pac perspective. Are they meeting investor expectations? I asked this to Sean earlier, but in terms of what is committed when they raise the funds versus the metrics coming out later. For Indonesia, we saw only 24% of the global metrics were being met. Do you see a better trend in ASEAN, better trend globally?
I think when we're talking about investor preferences, it's always important to understand that there isn't an global investor consensus out there on a lot of sustainability issues. So I think, as Sean mentioned, I think there is this spectrum of dark green to light brown to dark brown, and people are willing to be on that spectrum for different reasons. So some people are very focused on just green, pure renewables and very green labeled assets, whereas some other investors would be more supportive of a transition-linked instruments. So one of the big debates in the green bond market is, okay, well, if I have a fossil fuel entity, but they're investing in energy efficient investments that reduce their carbon emissions in the medium term, is that something that I'm willing to invest in? Similar when we talked about the sustainability-linked instruments, not every investor has bought into it. Some people think that the targets are too complicated, the mechanisms are too complicated, and they don't see it as something that they want to invest in. So depending on what we're talking about and where, investors have different opinions on what is sustainable. And so I think the important thing is, when it comes to understanding these green bonds and green structure, is that there is adequate transparency for investors to make a decision. Because there are, if we talk about, say, emerging markets economy, let's say in ASEAN, you can't necessarily expect the same level of standards in developed markets. And if you just, say, filtered out your investments towards developed market assets, it may not have as strong an impact on social or sustainable development. So you just need that information to be out there so that investors can make that decision. So I think I think that's the kind of key.
Okay. So, we are going to have a last segment in which I'm taking a question from the audience and I'm adding a question from my side, and you can choose to answer both, and we'll go in reverse order. We'll start with you, Mervyn. So the question is from an audience member. This is Axela Frayaska, if I pronounced that right. So the question is, what are the couple of main changes that Indonesia needs to make to boost sustainable finance in the post-COVID era? So this is a question common to all of you. And the second part, which I'm posing from my side, is tell me one project in the sustainable finance area that excited you and why. One project. What was so exciting about it? So main changes that Indonesia needs to make to boost sustainable finance in post-COVID era. and one project that's close to your heart that excited you in this area. Over to you, Mervyn.
Sure. So I think in this linking to COVID, what we have seen is that governments have responded with fiscal stimulus packages to battle the downside effects of COVID. And in some cases, we have seen green investments and green conditions set into that stimulus. And so one of the big things when it comes to the development of the green bond market is really the availability of projects. And so if you do have stimulus and public green investment in a market where there's there is not that risk appetite out there, that is an important driver of the green bond market. Now, for me, I think it's interesting when you talk about the most exciting projects, because talking to investors about energy economics, one of the key challenges when it comes to a faster climate transition or a low carbon transition is battery technology. Because when we're talking about, say, the marginal cost of wind and solar, it's already very low. The problem is that it doesn't act as a baseload replacement for something like nuclear or fossil fuels. If you reduce battery costs and battery technology, reduce the cost of battery technology and reduce the cost of battery in grids, you can fix that problem. And suddenly the economic sense for moving towards a low carbon transition with renewables is much, much clearer. So for me, I think that battery component is what it would excite me most when it comes to investment.
Fantastic. Hendro, what do you think Indonesia needs to do to change and increase investments in post-COVID era in sustainable finance, and any project that you have come across in this sector that excited you?
Yeah, Nalin. So I think, in my opinion, that given that actually there are many projects that can be financed through a sustainable or green bonds product, meaning that the project is actually can be eligible for the financing. I think the important things that needs to be boosted by the government is to provide a stimulus or the incentives for both sides, yeah, for the issuers and also for the investors. I think before the pandemic, there are studies that there is a potential of green investment in Jakarta alone is around $30 billion. So although there are maybe change in the landscape of this infrastructure development because of the pandemic, I think the room for the potential is still very, very big. And with the certain or the right incentive, the right stimulus, I believe investor and also issuers will very keen, yeah, to participate in the sustainable finance instruments. So in terms of the projects, in my opinion, what has just been recently created in Jakarta is the mass rapid transportation, is MRT. I think is a very positive development. It's a big jump, I think, in Indonesian infrastructure, and I believe this is also will support the sustainability impact, because this should transform people from commuting, from using passenger vehicles with the carbon emission to a more cleaner mass of transportation. And I believe it is needs also to be developed more rapidly in all around Jakarta area and also the big cities in Indonesia.
That's a good choice. Though it took some time coming, but I shouldn't complain.
Yeah.
In India, our projects take forever. It took some time coming, but I did take that MRT from the airport. It was absolutely awesome. Yeah. Isabel, the same two questions to you.
Thank you. Actually, I'm quite interested, and we are quite interested in broader aspects of the ESG agenda, right? Very often we feel that the social side of the equation is not well looked into. We we hear a lot about green bonds. We're now hearing about blue bonds. But so I just wanted to mention, I'm sure that many of the participants today are aware, but we actually issued a gender bond this year in 2020. We invested about $200 million in a sustainable bond program in Indonesia, and it's the first ever gender bond in Indonesia. And the bond is actually the second to be issued by us in the APAC region, following an issuance that we did with the Bank of Ayudhya in Thailand last year in 2019. So I think the additional point that I would like to highlight is that we should not forget that the SDGs and the 2030 targets include also an important social component, and that we should not be far from that aspect as well. In the specific case of Indonesia, we are very bullish. I think we have estimated in IFC that the opportunities in the specific area of green financing in Indonesia is going to be about $275 billion between now and 2030. So in our view, the investment opportunities in Indonesia are just multiplying. In Jakarta alone, I think we estimated that just climate investment opportunities between, say, last year when we did the estimation in 2018 or 19 to 2030, it's going to add another $30 billion. So we are very bullish. I think the government is going down the right path. As I mentioned earlier, a lot of more information needs to be disseminated to investors to make sure that we truly developed a new asset class.
Thank you. So Sean, hearing all these numbers, the startup guru within me can't resist asking an additional question. You will answer those two, but I give you an additional one. Can startup founders apply somewhere for this money? Over to you.
Sure. Maybe I'll ask you to clarify that one, but why don't I answer the first two first, and I'll come back to the third. So the question that I have around, what changes can be made in Indonesia, I think it sounds a little simple, but I think what's really important is both from a corporate perspective, but also from an investor perspective, you have to immediately start to understand how you incorporate ESG into your decisions, right? And a classic example was we had a European fund manager, right on the cutting edge of this, came out, gave a speech in the region, and put up on the screen, they'd done the homework about what their portfolio of assets looked like in the context of a 2-meter rise in sea levels, right? And they had a map of the region, and it was just extraordinary of how many sort of stranded assets were all over the map. And I would just remember the audience scrambling as they dive for their mobile phones, to rip them out and take a photo of this work. Because in reality, a lot of investors haven't yet done that homework, right? What are the impact of climate change on their investment portfolio? And I think it's really incumbent on the investors to do that homework, because that really shapes the allocation of capital. And then from a corporate perspective, it's also really important to understand how ESG is actually to be incorporated into your decisions as a board and to strategy. And a classic way to do that would be to think about, in an ESG strategy, what does my business need to do to conform to for example, a net zero carbon emissions scenario? Or what do I need to do to conform to a 2-degree or even a 1.5-degree scenario under the Paris Agreement, right? Because that regulations are going to drive that change. So you need to be ahead of that change as a corporate in terms of how you change your business model to align with that. And then once you do that, you can then start to say, well, here's my framework for delivering that change. And here are my KPIs to meet that change. Once you do that, you can go and issue bonds off the back of it. You can really benefit from the work in terms of the investor allocation of capital. So it's really incumbent at the very first stage. Don't think of it as, I want to do a green bond to save 2 basis points. Think of it as, how do I change my business to understand what ESG means, right? It's really at that very basic level. I think every corporate and every investor needs to do that. And then I think from a project that excited me, I have to say it's boring, but to repeat it, but absolutely the Indonesia sovereign bond was huge, because to me, that was really, somebody starting from the ground up in terms of, how do we implement a strategy? Because obviously, Indonesia had made these commitments around Paris Agreement, and it was already kind of committed to these principles. But how do you operationalize it? How do you put it into a framework? How do you report on it? It was very, very exciting to see how that work went through to the different ministries to figure out how do you tag projects that conform to that? How do you track the changes that need to happen at the ministerial level to deploy the proceeds and see the country align itself with these commitments? That was very, very exciting project, and we were very, very lucky to be involved. And I think those are my answers on the first two questions. Can you just repeat the third one again?
I'll come back to that. I'll come to that. But 2 points I would like to emphasize what you made are very important. For any kind of investment, I see it in the startup space too. The investors must know what they want. They must have a good understanding. So that's a very important point you brought out. And the second, the project you chose as the one closest to your heart, it's not boring. I think launching that for a country, Indonesia, India, probably in the same bucket, these are not exactly the most nimble countries that are first off the blocks. You would think of a Singapore, you would think of somewhere in Europe, and in this region, you would think some other countries. So it must have been tough, and hats off for getting that off the ground. Yeah. My third question that I posed to you was, there are a lot of startup founders, right? Starting companies and businesses in the sustainable development phase. They do things that will meet some of the SDG goals, etc. Is there a way for them to tap into this, or is it still too early?
Look, it's tricky from a bond market perspective, because generally speaking with a bond market, most investors are looking for something which is quite well developed, has a strong track record in terms of, credit worthiness, performance, credit metrics that they can look at.
You're breaking a million hearts.
Yeah, no, absolutely. And from a rating agency perspective, typically they will want something from a ratings, right? But I think what is interesting though is just the development in terms of the dynamics and the change that needs to happen across the world to try and meet these very kind of important objectives of net zero and 2 degrees, etc. There's huge transformation that needs to happen in terms of change in the economy. So I think the key part that we're looking at as well is actually, for example, one of the developments we're working on at the moment is around the trade and working capital cycle, because what you've got is change that's happening in some of these big corporates, right? But then within that, those corporates then are working with new suppliers, right, in innovative startup kind of industries. And then if you can actually label that trade and working capital financing as green, and you're lending to the corporate, they can then push that down through and the benefit of the cost of borrowing through the trade cycle. So I think there are measures to get the financing out there, but it's probably more in the loan market, and it's probably more on the equity market than it is at the bond market at this point. Just because the bond market tends to be more focused on ratings and long track records.
They need a track record, and they need some kind of assurance and stuff like that. But these companies, young companies, could partner with companies like this and be a supplier to them or help them meet some of their goals and get some downstream.
That's exactly right. Kind of thing, right? Correct. So supporting well-established industries that need to change is definitely an important way to kind of get access to capital, I think, as well. But there are, not so much in the bond markets, but there are commitments being made by various banks, including HSBC, in terms of transition financing and, supporting startups. It's just not necessarily in the highly developed bond markets, but it's much more on the equity and the lending side of things that you've got access to that form of capital. And that's certainly something that we as an institution are very keen to continue to support. Yeah.
Yeah. Now, I did come across a university in Indonesia where HSBC has a very active accelerator program. So
yeah, absolutely.
On that one. We are absolutely out of time. What a wonderful panel. I must thank all of you, all the insights. It's a tough subject, right? But all of you demystified it. And, even for a layperson or students watching, I think they would get a lot of insights from this session. thank you very much. Thank you for joining this panel on the Indonesia Economic Forum, and have a great day. Thank you.
Thank you, Nalin.
Thank you.
Thank you. Thank you
Thank
for
you,
having
Nalin.
me.
Thank you, Nalin, for moderating panel, but I think asking some very incisive questions, some very illuminating answers. I think I've been more. This is one of the most educative on a very complex subject, which has a broad and deep impact, I think, on the future growth of Indonesia. So thank you very much. I would also like to thank all the panelists: Sean Henderson, Isabel, Chatterton, Hendro, Utomo, and of course Mervyn, Tang. Thank you very much. I think this was a great encapsulation of the 2 days of the Indonesia Economic Forum that we've held so far. We'll be back tomorrow morning, bright and early at 9:45 for another full day of some amazing speakers on some very important topics, including the future of education, higher education in Indonesia, the agri-tech revolution, IoT and the whole internet game, and of course emerging new investment trends, which will close our 3 days. Thank you very much for staying with us for the last 2 days. Stay with us, continue and join us tomorrow morning. Take care and God bless.
Yang dimana shock dari COVID ini betul-betul memukul dan kemampuan kita untuk mengcounternya tidak bisa menetralisir cukup besar.
Memprioritaskan kesehatan bukan berarti mengorbankan ekonomi. Sekali lagi, kita harus mencari keseimbangan yang pas.